All right, let's dive right in. We're looking at one of the most tense moments in the crypto market, maybe all year. You can just feel it. Multiple indicators are blinking red, telling us that a huge move is coming, and it's coming soon. The only question is, which way is it going to go?
The best way to think about it is like a coiled spring. For weeks now, the market's been weirdly stable, just bouncing around in this super tight range. But don't let that fool you. All that quiet is just energy building up. And history tells us that when you see this kind of compression, it's almost always followed by a really powerful, really violent release.
And that brings us to the big question, doesn't it? Is that release going to be a catastrophic crash that wipes people out? Or is it going to be a massive explosion to the upside that sends us to new all-time highs? Let's break down the signals and see what the data's really telling us. So let's start with the core evidence here. This isn't just a gut feeling. There's a classic market signal that's flashing right now, one that has a track record of showing up right before some of crypto's biggest, most historic moves. The technical term for it is volatility compression. It's a textbook market setup. Basically, when volatility, which is just a measure of how much prices are swinging around, gets squeezed down to historic lows for a long time, it's a sign. It means the market is getting ready to make a big, decisive move. And this isn't just one indicator, We're seeing this pressure building from all sides. There's a heavy squeeze on Bitcoin, Ethereum is trading in this tight accumulation range, and you look at the futures data, oh man, traders are placing some huge bets. What's kind of spooky is that this whole setup looks almost identical to what we saw right before the massive breakout back in 2020. Okay, so let's zoom in on Bitcoin because this is really where the main event is happening. The battle lines are so clearly drawn. The price is basically trapped between two incredibly important levels, and whichever one breaks first is probably going to dictate where we go next. The first number everyone is glued to is $82,000. You should think of this as the floor. It's the critical support level that has saved the price from falling again and again. As long as we stay above this line, the bulls still have a fighting chance. And then you have the other side of the coin, the ceiling. That's sitting right around $89,500. This is the big wall of resistance that has shut down every single attempt to rally higher. A clean break above this would be a huge signal that the bulls are finally back in charge. So this lays it out perfectly. The two paths forward are crystal clear. If that $82,000 floor gives way, we could see a pretty fast drop down towards $76,000. But if the market can find the strength to smash through that $89,500 resistance, well, the path to $100,000 and beyond opens up really, really fast. And what's happening right now is what analysts are calling a battle phase. It's a total slugfest. On one side, you have these massive buy walls. We're talking huge buyers, propping up the price on exchanges like Binance. On the other, you've got giant sellers hitting the market on places like Coinbase, trying to push it down. And stuck right in the middle, you have trading bots just fighting over every tiny price move. This is exactly what it looks like right before a winner is finally decided. Now let's pivot for a second to Ethereum because its story is a little different. While Bitcoin is in this loud, obvious street fight, something quieter but just as powerful is happening with ETH, institutional accumulation. The big money is moving in. And the evidence is pretty compelling when you lay it all out. We're seeing more and more ETH being staked, which locks it up for the long term. The supply available on exchanges is just dropping and dropping, meaning people are moving it into cold storage. Plus, we're seeing steady money flowing into the new ETFs, and big funds like ARK Invest are reportedly buying more. This is like a strong foundation being quietly built right under the current price. Okay, so we've got the whole setup. Now let's talk about the first potential outcome. And we have to be real about it, the crash scenario. There are some really significant risks hiding in plain sight that a lot of traders seem to be ignoring right now. The biggest risk factor, hands down, is leverage. The market is just flooded with traders borrowing huge amounts of money to bet on higher prices. It's created a very, very fragile situation. So when you combine that with sometimes thin liquidity and the very real risk that some of those early ETF investors might decide to take profits, well, you've got all the ingredients for a sharp, sudden drop. And this is the real danger. This is what you have to watch out for. If the price drops just a little bit, it can start to trigger a wave of forced liquidations. Basically, the exchanges force sell these leveraged positions. Those sales push the price down more, which triggers even more liquidations. And you get this domino effect, this cascade, that can turn into a full-blown flash crash. It's a scenario you just can't afford to underestimate. But what about the other side of the coin? Let's flip this around and talk about the explosion scenario, because the fuel for a massive rally is just as present as the risks for a crash. This slide really lays it all out. You've got strong, consistent money flowing in from the US ETFs. You've got that massive institutional buying that we just talked about. At the exact same time, the supply of Bitcoin on exchanges is shrinking, and on top of all that, we're still feeling the effects of the recent halving, which literally cut the creation of new Bitcoin in half. That's a classic supply shock. Now, if all these forces combined can manage to push Bitcoin above that critical $89,500 resistance level, watch out. That could be the spark that unleashes a global wave of FOMO, the fear of missing out. That's the moment all the people sitting on the sidelines get scared they're going to miss the boat, and they all jump in at once, pouring rocket fuel on the fire and potentially sending this whole market parabolic. So, there you have it. Two powerful, completely opposing scenarios. A crash or an explosion. The market is primed to move, and move violently. So the real question for you is, how in the world do you prepare for something like this? Here's a simple 4-step playbook. First, watch those key levels like a hawk. 82K on the downside, 89.5 on the upside. They're your guide. Second, stay liquid. Have some capital ready to go so you can act when the time comes. Third, and this is a big one, avoid high leverage. This is not the environment to be taking massive risks. And finally, number 4, just be patient. Wait for confirmation, let the market break one of those levels before you go all in. At the end of the day, nobody knows for certain which way this is going to break. But as the analysis makes perfectly clear, the one thing we can be absolutely sure of is that this period of calm, it's about to end. So that leaves us with one final thought. A huge move is coming. The question isn't if it will happen, it's when. So looking at both of these powerful scenarios, which side are you prepared for?